The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Hello and welcome to the COB, all the stuff you need to know about the day in business and finance. My name's Kyle Rodder and I'm with Danny Akuye and Juliet Saleh at my left and my right. They insisted on doing this and I have to say I'm very flattered, of course, but let's get straight into the markets now. Look at where the CBO 200 has finished up and Juliet, it looks as though it's going to be a negative day, albeit to finish off what was a fairly positive week.
Yeah, we were saying before, wake me up when September ends. Is that the kind of theme? Because we are seeing a little bit of a selling going into the first day of the new year, but of course, the new month, I should say. It's not quite a new year. It's like, oh, where am I? But we're down by about a third of 1%. And look, a lot of that is about the miners, which we're going to get to a little later on, Danny.
Yeah, absolutely. And I've got the ASX 200 down about 26 points or 0.36% to 7,278. And yes, the first day of spring, well, the markets haven't sprung.
No, not yet. But let's get across now just our three themes for the day. FMG, who wants to go first? Because
yeah, that's a really interesting one, isn't it? Because it looks like there's a bit of a punch-up going on with not shareholders, but you have some shareholders deciding to sell out. They just don't want to be part of it. And then you've got other shareholders that saying, no, this is just short-term noise. You know, everything's fine. It raises lots of questions, don't you think, Juliet?
It does. I mean, it's very interesting that you've had something like 11 quite senior executives since 2021 leave Fortescue. So we had the CEO quit earlier this week, and then now we had the CFO today, and then Guy Debelle leaving the green energy unit, that board. But I was talking to Gemma from nabtrade about this earlier, and she said, look, like the big term investors in Fortescue, they're going to be going off what's happening with the iron ore price rather than the boardroom shakeup. But certainly there's some really interesting opinion pieces out there too. What does it mean? Is there a bit of reverse greenwashing going on as well, particularly with Guy Debelle walking away from the FFI? Yeah, indeed.
There's like a bit of a Greek tragedy now for Twiggy Forrest, and perhaps getting to that third act where things tend to go a little awry. But we'll talk about FMG perhaps in the moves, leaders and laggards towards the end. But housing, also an interesting one, Danny, up by another 0.8%.
Yeah, it is really interesting because we had that guest in yesterday who was chatting about the property market and how all the buyers have returned. And just anecdotally, my local agent keeps pinging me saying another property is flown.
Is he trying to get you to sell, Danny?
Well, they always want you to sell, but it's more a case of like this property's come on the market, oh, it's gone already. And it looks like this FOMO in the housing market is cropping up again.
Yeah, exactly. To be fair with Danny, it's one of her extensive residential property portfolio, isn't it? Across
the absolutely.
She's just like, which one will I sell this week?
Yeah, exactly.
How I wish.
don't we all?
But interestingly, can I just say on that, with the capital city gains, every single capital city except Darwin. So Darwin saw actually a loss of about 0.38% when it comes to house prices. So
interesting.
Yeah.
Okay, there you go. All right, well, let's get across the sectors of the day now as well. Miners obviously in focus because of the FMG news. Let's have a look at how the other miners fared now. And overall, fairly mixed picture there, obviously, Danny.
Yeah, I mean, obviously, the one that stands out is Fortescue, which is down. It was down 5% at one stage. Interestingly, Dalian iron ore futures have continued to tick higher. They're up to US $116 a tonne. So at the very least, the speculators, the punters are out there really expecting China to act more in terms of boosting steel demand.
We saw a bounce back in energy as well, Julia, but I think that maybe Whitehaven Coal, after jumping 9% going ex-dividend yesterday, might have helped out. But Woodside there, you can see up 1.5%.
Well, it's Santos too, isn't it? With that sale of that near 3% LNG to PNG, to Papua New Guinea. So that's gained around 2%. So a very big jump coming through from Santos today.
And just Ampol, it's gone ex a 95-cent dividend, just so everybody knows.
Okay, indeed, another ex-div there. Retailers as well. Let's get a health check there, because actually one of the areas of the market that's certainly surprised to the upside, and also some strength coming back through, perhaps defying the broader dip, I would call it, in the market today, Danny.
Yeah, it is interesting to see the strength there. I mean, Wesfarmers has been very strong. It's carried its ex-dividend very, very well. And, maybe there's some positioning ahead of those jobs numbers, as in, people are expecting a soft one, hence yields coming down, hence you buy retailers. I have no idea why
Well,
they're up.
Myer is a big one there too. So a gain of 2.2%, and that's because we've heard that Solomon Lewis Premier's investment has been the buyer behind about 25 million shares in Myer. Wow. So about 3% of Myer and worth around $16 million. So that's certainly one that has been in focus in that space today.
Yeah, indeed. And last but not least, let's just have a look at the banks. Excuse me, because we have to. Don't take it away.
Oh, sorry, the banks. Okay, a lot of bit of profit taking coming in there. And Commonwealth Bank, holding on to that 101 level, but generally just soft across the board on those. And have we got any other sectors that we're checking in on?
No, but what we wanted to talk about was some of those big corporate stories as well. But Danny, also your thoughts on what September will bring with the View.
Yeah, so with the one I wrote today.
Yeah,
well, I was talking really about the fact that I think we're going into a lot harder period for companies, and I think Salesforce in the US, their results is a really good example because they have crushed costs completely. So they have good results, but now they need to grow earnings, and they need to grow earnings through acquisitions. But they're not really in a position to do that because the cost of debt is really high. Board is leaning on them not to make acquisitions, so they have to grow organically. I think that theme is very much going to abound with companies, just in terms of the easy adjustment to slower economic growth has taken place. Now it is going to get a lot harder, I think, in the next 2 quarters.
Yeah, let's have a look. I mean, we've mentioned some of the stocks in detail that we have been talking about. We've already mentioned, of course, what's been happening with Fortescue, what's been happening with Myer. There were quite a few broker calls as well today. So, I mean, that's a look at Fortescue over the year and really gets to the point of Gemma's, point that people are in it more for the iron ore. Perseus Mining was an interesting one, particularly as we saw a few broker upgrades coming on the back. I spoke to the CEO of Perseus yesterday, and they're still looking at that potential movement into Sudan, but waiting for the civil unrest to move on.
And Santos steals the show with a reiterated buy by Citi and a price cut of $9. So they have sold down the LNG to Kumul and the Barossa projects to PNG, which is very positive for Santos.
Yes, and let's get to the stock of the day, Danny, because you were hosting. Had a special guest as well, mind you. But
apparently so.
Apparently so. I think you'd met before. There was fireworks, really. But Fortescue Metal was the stock of the day.
Yeah, Fortescue was stock of the day, and I had Claude Walker and Rudy Philippek Van Dyke. So let's check in and see what they had to say.
Do see a bit of a slowdown in demand probably for Fortescue in the short term, and for that reason, I would just on the short term point of view, I guess I'd be a sell, but long term, I wouldn't. I'd more be just this is an interesting stock. There might be the right time to own it again. That's where I'm at with Fortescue.
Since China is arguably overproducing steel, and Fortescue is producing a lower grade product in comparison to BHP and Rio, the risks are higher. Mm-hmm. And if you get something like this, rumblings in the state of Denmark, I think it just adds to increasing risk profile. So for me, and I'm not your typical investor in commodity stocks anyway, but for me this would be a hold at best, a cautious hold at best, but I would probably just for the reasons, because the risk profile for me would be too much. I would not be in there in the first place, but if I were if I were there, I would sell.
Fair. Yeah, 2 very cautious guests there on FMG basically. So risk profile going up, and the stock for many investors still just beholden to where the iron ore price goes, but nevertheless not good.
Trades at such a big premium as well. I think retail investors do really like it too. So anyway, there you go. That's the stock of the day. But Patiently waiting has been Dr. Shane Oliver from AMP. He's standing by now live via Skype. Dr. Oliver, thank you so much for joining us. Of course, you can see the three musketeers, the three amigos here hosting. Let's just start with, now that we're at the end of reporting season, we've asked you every week for your appraisal. Hits, misses, what was your expectation, appraisal of the earnings period? Because it would seem there was some big swings there in some share prices.
There certainly was. I would characterise the reporting season as sort of better than feared, but not great. On my count anyway, we had roughly an equal number of beats versus misses, whereas normally you see more beats than misses. We've got profits up on a year ago, but only just. For the reporting season as a whole, it looks, or financial year as a whole, it looks like earnings are up something like 1.5%. We've got 56% of companies reporting higher profits, which is less than normal. And obviously a big chunk, 44%, reporting declines in profits, which is higher than normal. And less companies raising their dividends. 40% of companies raise their dividends, whereas the norm is quite a lot higher than that, which indicates a degree of corporate caution. And even though the results overall weren't worse than feared, if anything, they were better than feared. It is worth noting that through the reporting season as a whole, analysts downgraded their expectations for this financial year. So at the start of the reporting season, at the end of July, a month ago, we were looking at earnings growth for this financial year as being a decline of 0.8%. Now we're looking for a fall of about 5.5%. But you can see in that table there, that chart there, that the number of companies reporting above, a little bit less than normal, bit better than it was in February. And the number of companies below is a bit more than normal as well. So that's what I mean. It was okay, better than feared, but it wasn't great.
Shane, let's talk about inflation falling more than expected in July. We were just talking about house prices too. What does all this mean for the RBA next week for its September meeting?
Well, I think it will give more weight to the inflation numbers than the house price numbers. It has indicated that it will look at global conditions, it will look at household spending, the jobs market and inflation. And when you run through those things, you could argue that the global conditions show a continued easing in inflation. When you look at inflation in Australia, we've got the chart up there showing the headline number, both the quarterly and the more up-to-date, of course, monthly number, which is the dash line. And you can see there the trend is down, and our own pipeline inflation indicator points to more weakness ahead, albeit it's that indicator, the blue line, has had a bit of a bounce lately, but it's still pointing to more weakness ahead. So that's positive. Jobs numbers have been on the soft side, and of course, wages growth has been on the soft side. And we've got retail sales, which are tracking sideways over the last 9 months or so. So all of those things, I think, are consistent with the RBA leaving rates on hold. But of course, that pickup in house prices, whether you look at the prop track or the core logic numbers, and they do vary a bit, that's probably a warning sign that the RBA is going to be a bit cautious about cutting rates anytime soon. We were thinking rates start to come down through next year, but that strength in the property market is a bit of a warning sign that maybe the Reserve Bank won't be rushing into rate cuts. I must admit, I'm surprised by the strength in property prices. I have been surprised at the extent of the upswing this year, particularly given the hit to the capacity to pay that new borrowers have had as a result of higher interest rates. But I'm also conscious we've got a massive undersupply out there, given the resurgence in immigration, and that's the main factor driving the property market at present.
Shane, September, dare I say, the beginning of spring, and September, unfortunately, is not always a good period for markets. Do you think this year is going to be any different?
Well, it's nice. You always feel happy beginning of spring. I look out there, it's nice and sunny, a bit cold in Sydney today, but nice and sunny anyway with a stiff breeze blowing. But, it's a happy time in Australia. But, of course, the Northern Hemisphere dominates. September is known to be one of the weakest months of the year. We saw that seasonal weakness kick in August, partly reversed at the end of the month. But shares in the US globally and Australia still ended up down for the month as a whole. And you've got to allow that we're still in a rough seasonal period. So I think on a 12-month horizon, the fact that inflation is receding, coming down, that core PCE inflation number in the US, 0.2%, multiply that by 12, you get 2.4%. Maybe I'm getting too excited here, but that's good news. You can't deny that. It does take pressure off the Fed, and likewise in Australia for the RBA. But you still have that risk of recession as the lagged impact of monetary tightening comes through. We are seeing the softer jobs market in the US. And so all of these things, I think, it suggests we should be relatively cautious as we go through what is still a seasonally weak time of the year. There's still uncertainty about China. Later this month, we're going to have more focus on the US yet again. This soap opera drives me bonkers. I've been looking at that for years now. Shutdown, debt ceiling, over and over and over it goes. There'll be some last minute deal, but you can still have a shutdown before that deal is reached. So that's going to be an issue in the US. And of course, I think I mentioned China. So all of those things are still playing in here and could still give us volatility through this seasonally weak period.
Last question, Dr. Oliver, of course, and we have the non-farm payrolls numbers tonight. The narrative seems to have shifted just a little bit this week around US labour market with some softer figures coming through. So what's your assessment of the state of play there in the US when it does come to the jobs market?
I think it's now quite clear that it's cooling. If you look at job openings, if you look at the quits rate, if you look at hiring, and there's a graph there showing both of them, you see quite a clear downtrend. And as people start to realise that there's less job openings out there, when you've got a job, your bargaining power goes down a little bit, and that's why people are not quitting at the same rate that they were from their existing jobs to go to new jobs. We also saw some figures from Challenger Gray, which is a hiring company, I think, in the US, and they're reporting a very strong rise in layoffs in the US. So it looks to me like it's cooling down. Now, of course, the payroll numbers have short-term primacy over all of these things, so the market's going to be very intently focusing on them tonight. But the upstream message, I think, for the jobs market is that it is cooling. That will take pressure off wages growth, further pressure off wages growth. And I think the Fed has to see that as a very positive development. Now the problem is if those lines go down too fast, and then you go from no longer worrying about inflation, then we have to start worrying about rising unemployment and recession. But obviously that's a fair way to go before we get to that point. And hopefully, if they do keep coming down, I think they probably will, they don't go down so far that it causes a severe recession.
Dr. Oliver, we'll relish the fact that bad news is currently good news, and we'll wait for the other shoe to drop perhaps in time. But really appreciate your insights as always. Have a wonderful weekend. Dr. Shane Oliver there from AMP.
Thanks, everyone. Take care. All the best.
Okay, let's see if we can just look at what's going on tonight while we wait for the final data to come through, perhaps on the leaders and laggards. But obviously it will be that non-farm payrolls number tonight. Juliet, and there we go. Long weekend in the United States, so might be a quiet start to next week.
Well, indeed, and maybe everybody needs that little breather, I guess, after reporting season, but it will be Labor Day, so no trade, of course, in terms of the cash market, but we will be reacting still to what that US jobs data releases tonight when we trade on Monday. And of course, Danny, Tuesday is the big one. We're just talking about what Shane Oliver thought with what the Reserve Bank might do there too.
Yeah, absolutely. Looks like the RBA will be on hold. Just worth bearing in mind that Tuesday next week that the US Treasury has a very large issuance, US 127 billion in treasuries, 2, 5 and 7. So it's really could be like a test market event in terms of demand, where yields go, and it'll be interesting because, as we said, not trading on Monday.
Yeah, well, I suppose that's what really got August off on the wrong foot, wasn't it? That we had that big funding round in the United States that, caused a little bit of upheaval, a very minor upheaval, but obviously was probably one of the big reasons why August was such a negative month right across global equities. And well, of course, that hurdle tonight is going to be fascinating. With the jobs figures, will certainly inform whether the Fed might need to go again. But let's get across the leaders and laggards, of course, and we'll use that to wrap up the day. And the leaders now, let's have a look. Off we go. Okay, to the leaders, of course, and let's see what we've got. All right, Magellan, 4.8% higher, leader of the pack today.
Whitehaven Coal, that was one we were talking about yesterday that went ex-div, right? And so definitely a bounce back today because investors responding favourably, of course, to what we saw in the metal space, but also their earnings. So a gain of around 4%, and Paladin looking pretty good there too, up 3.5%.
Looks like the uranium bulls have got fired up again recently.
They have, yeah, actually.
And over in the US as well.
Yeah, no, I had I think it was yesterday. I had a guest on. In fact, it was Jason McIntosh, just using the Sprott ETF, I think it is, which is just a good way to play the underlying uranium price. But that's pushing to new highs, and I don't know what necessarily the thematic is there, but hope, or pessimism, perhaps, for the future.
And then just staying in that sector when they're, a day when you don't want to buy Fortescue, maybe you're looking at other parts.
Yeah, and it doesn't take much for those sort of uranium bugs to fire up. Of course, they're closely related, I think, to the Bitcoin bugs and people of that variety. A very passionate group of individuals, and high conviction behind that play often. Let's go to the laggards though. Let's see if Fortescue made it onto the list. Perhaps it did. Certainly, an invidious day for the company, down 4.85%. But Lake Resources, again, the biggest loser on the market. Chalice Mining actually is the interesting one this week, down a further 7.3%. It was off 25% on Wednesday or Tuesday, I believe it was. Yeah. Also a further 5% yesterday. So it's basically shed half its value over the last 3 trading sessions. So a very painful trade there for investors. And I did my best at trying to explain the science and engineering behind this, but effectively they were doing a bit of a scoping study. Investors apparently weren't convinced of the pricing that the company applied to the minerals, what was it again? The palladium, I think is what they mine. Anyway, it's caused all sorts of...
Talk as well about BrainChip, because hasn't that been a terrible week too? It's something like 12% drop earlier in the week too on its half-year results, so down by another 4% as well. And that's basically because you've got the semiconductor, coming through with a disappointing first half, and they also saw their losses double to $17.15 million, but a lot of short sellers in that stock too.
Yeah, interesting. Okay, small cap leaders and laggards. Let's see if there's any noteworthy movements there. In the context of things, not a huge movement, especially for a company that's worth 1 cent. I don't even know what 16 cent is. 16% is on 1 cent. Let's go to the laggards in the small cap space, see if there's anything else that jumps out there. Mesoblast often makes the list.
It does indeed. Under the pump again, off almost 11 cents. Wow, that's been a pain trade, that one.
Yeah, it certainly has. All right, we're running out of time. Let's get a final check on the market, shall we?
Yep.
COB 200 finishes the day's trade down by 0.3%.
Yeah, which is pretty much the same as the ASX 200. It's off 27 points, 7,278, or 0.37%. Not the way that we wanted to end Friday, but hey, it could have been worse.
It could have been.
Kyle's final show.
Exactly.
It's been a pleasure, even though it's been 5 minutes for me.
Hasn't been long, yeah. It's a funny omen, you and I, because I realised the last interview I did on Bloomberg in my previous life, I think it was you as well. So. And
now I'm here. Yeah, is it something I said? You quit the day I started. Sorry about that, ausbiz.
Yeah, no, that's.
And Kyle, you've held my hand when I started in my first ausbiz move into ausbiz when I was so nervous I'd sit in the corner watching. So we're going to miss you.
Yeah.
Thank you.
No, we had fun. The only thing I'm disappointed about, Danny, is that some of our very heated debates about economics and energy policy and all these things weren't recorded, unfortunately. Our best stuff.
Off air. Off
air.
Hey, maybe we can do that when you're the guest.
Yeah, you can take your revenge perhaps and really deal with. But anyway, that's that. Yeah, of course, it was my last day at ausbiz. Going back home to Melbourne to be closer to loved ones. So it goes sometimes, but it's been a wonderful experience with wonderful people, and I've had a lot of fun here. So I leave with a heavy heart. But nevertheless, make sure you catch up on all the wonderful content on your website and app. And I won't see you Monday morning, but our 3 wonderful hosts will. Have a great weekend.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.